Hi, welcome to Solution in YouTube channel. In today's video we will discuss accounts payable, also known as trade payables. Accounts payable refers to an account within the general ledger that represents a company's obligation to pay off a short-term debt to its creditors or suppliers. When a business purchases goods on credit, it commits to pay its debts within a short time. This commitment is a liability for buyer and it should be recorded as accounts payables. A company's total accounts payable balance at a specific point in time will appear on its balance sheet under the current liabilities section. Accounts payable are debts that must be paid off within a given period to avoid default. At the corporate level, account payable refers to short-term debt payments due to suppliers. The payable is essentially a short-term IOU from one business to another business or entity. The other party would record the transaction as an increase to its accounts receivable in the same amount. Account payable is an important figure in a company's balance sheet. If account payable increases over a prior period, that means the company is buying more goods or services on credit, rather than paying cash. If a company's account payable decreases, it means the company is paying on its prior period debts at a faster rate than it is purchasing new items on credit. Accounts payable management is critical in managing a business's cash flow. When using the indirect method to prepare the cash flow statement, the net increase or decrease in AP from the prior period appears in the top section, the cash flow from operating activities. Management can use account payable to manipulate the company's cash flow to a certain extent. For example, if management wants to increase cash reserves for a certain period, they can extend the time the business takes to pay all outstanding accounts in account payable. However, this flexibility to pay later must be weighed against the ongoing relationships the company has with its vendors. It's always good business practice to pay bills by their due dates. Proper double-entry bookkeeping requires that there must always be an offsetting debit and credit for all entries made into the general ledger. When supplier delivers the stock to buyer and raises a sale invoice, to record accounts payable, the buyer's accountant credits accounts payable when the bill or invoice is received. The debit offset for this entry generally goes to an expense account for the good or service that was purchased on credit. When the bill is paid, the accountant debits accounts payable to decrease the liability balance. The offsetting credit is made to the cash account, which also decreases the cash balance. A company may have many open payments due to vendors at any one time. All outstanding payments due to vendors are recorded in accounts payable. As a result, if anyone looks at the balance in accounts payable, they will see the total amount the business owes all of its vendors and short-term lenders. This total amount appears on the balance sheet. Another important aspect of accounts payable days is the frequency a company pays its obligations. This is known as days payment outstanding or accounts payable days. The formula for calculating days payment outstanding is accounts payable divided by cost of goods sold times days in a year. If a business has $300,000 of accounts payables on its balance sheet and the income statement reports a cost of goods sold of $2,700,000, then assuming a 360-day year, the accounts payable days will be 40. This payment period shows that company pays its creditors after 40 days of purchase. The longer the period is the better, but it is also risky because the supply of goods might be interrupted by vendors. However, the payment periods can be different for different businesses and payment terms might be significantly different in different trade zones. The best way to gauge the payment period length is to compare it with industry average. If you have understood the basics of accounts payables, please hit the like button and don't forget to subscribe for more videos. See you in next video. Take care.